Welcome to weekly view on markets. Markets gained around 6% during last week and continued the rally in this week and added another 1.26%. Mid cap and small cap indices outperformed, gaining by around 3 to 4% during this week. Charts show strong uptrend. Global geopolitical situation is highly volatile. There is a lot of confusion on ship movement in Hormuz Channel. It is reported that two Indian cargo ships have been attacked yesterday. These developments will have impact on market movement in the coming week. Nifty has closed at 24,353. It gained 1.26%. Bank Nifty has closed at 56,565. It gained 1.17% during this week. Bank Nifty has underperformed other indices during this week. Mid-cap index has gained a 3.55%. It has closed at 59,898. Small cap index has closed at 17,565. It gained 4.31%. Small cap and mid cap indices have crossed crucial resistance level on the charts. India VIX has lost around 8.75%. It is at 17.20. India weeks coming down indicates that the confidence of the investors in the market is going up. Now let us look at different sectors. Almost all the sectors gained during this week, except the auto sector, which marginally lost. It lost about 0.77%. Defense sector gained the most. It gained 6.2%. Energy, consumer durables, metals, public sector companies all gained between 4 to 5%. Media sector, realty sector, commodities stocks, FMCG sector stocks, information technology all gain between 2 to 3%. Manufacturing, infrastructure, healthcare, oil and gas sectors gained between 2 to 3%. NBFCs and private banks gained about 1.5 to 2%. There was buying in most of the sectors. There were more advancing stocks than declining stocks during this week. Now let us look at technical charts. This is the chart of Nifty index. Nifty index has fallen from around 26,200 before the Iran war started, and it came to 22,500. From there, it has given a swift recovery when the ceasefire announced, and now it has closed at 24,500. So it is closing about 24,500 is a significant technical level. It has crossed the resistance level and it is likely to go towards 25,000 in the coming week. This is the chart of Nifty Midcap Index. Midcap Index fell down from 61,000 levels to 52,500 levels, and from there it has recovered and now it has come down to 59,898. The swift recovery shows there is a lot of bullishness in the sector, and based on the geopolitical developments, mid cap index may go to higher levels if there is some positive news in the coming week. This is a chart of Nifty small cap index. Small cap index has gained around 4% during this week. It has closed at 17,565, and small cap index crossing 17,500, which was a crucial resistance level earlier, is a good sign, and it is likely to move towards 18,000 level in the coming week based on the news flows. And After that, it can go to the previous all-time high of around 19,200 levels. This is a chart of Bank Nifty index. Bank Nifty index has slightly underperformed comparing to other indices. Bank Nifty indexes has closed at 56,565. It has strong resistance at around 57,000. If it crosses that, then it can go to 57,500. And when the Iran war started, it fell from around 60,000 level. So Bank Nifty will take some more time to reach to 60,000 levels. Now let us look at some of the market fundamental parameters. India's macroeconomic parameters continues to remain quite good despite the war situation. RBI foreign exchange reserves is at 700.94 billion US dollars at the end of this week. It is up by 3.8 billion dollars in this week. Rupee has strengthened. It is at 92.92 for $1. Rupee had hit 95.8, and from there it has strengthened and it has closed at 92.92. Dollar index, after hitting around 101.5, it has come down. It is at 98.10. The index coming down and rupee strengthening has helped the RBI forex exchange reserves, which has improved by 3.8 billion US dollars in this week. The Brent crude price is highly volatile from around above $100 per barrel. It has come down to 90.38. Again, the news from Hormuz Channel, where most of the oil ships are passing through, is very erratic and volatile. Based on that, the crude price is likely to be highly volatile in the coming week. Gold is at 1,54,610 rupees for 10 grams 24 carat. Gold is quite steady despite the war situation. FIIs have reduced their selling, and during this week, on most of the days, they have bought small quantities. Net for the week, they have sold 251 crore, and DIIs have sold 5,965 crore in equity during this week. There is a change in the stance of DIIs. They used to buy earlier. This week, they have sold 5,965 crore, whereas the FII have started buying in small quantities. Inflation for the month of March 2026 has come. The inflation has gone up in the month of March due to higher oil prices and freight costs, and also due to food inflation. It was 3.21% in previous month. From there, it has gone to 3.48%. Second round of peace talks on Iran war is likely to be held in the coming week. Based on the situation, it is likely to have impact on the market movement. Opening of Hormuz Channel will be a big relief for international trade. Oil prices may come down if the channel is open for free movement. Lower oil prices and lower freight cost will bring down the inflation. So there is a lot of international effort and also pressure on Iran to open the channel, but the news is highly volatile and there is a lot of confusion about opening of the channel. Markets are in bullish move as shown on the charts, but will be highly volatile due to the developments in Iran. Mutual fund investors should continue their SIPs. Cost averaging gives them the advantage in the long term. The market volatility helps them in the long term. They should not worry about the market volatility. They should continue their SIPs. This is all for this week. If you like my video, please subscribe to my channel You can refer to your friends and you can ask your question, which I will reply. We will meet again next week. Thank you.